In this video, I will give you a list of 2 stocks that could give you solid returns in the next few months. Firstly, I'd like to tell you that there are a few factors that are at play for the next few months. But first, hit that like button and also you subscribe to this channel if you still haven't, because YouTube would send out this video to as many traders as it can. That's how YouTube algorithm works. So don't forget to hit that like button. So now talking about the important factors that could be in play for the next few months. Firstly, we are entering months that are seasonally good for the market. And the reason for that is also quite clear. These months are good because this is the seasonal month wherein we have a lot of festivals, and during festivals there is a good demand for products. So if you look, we are approaching the season of Diwali, and during Diwali the sales of many products is quite good, and after that it is the holiday season. December is considered as a holiday season, so there could be demand for goods such as airline travels, or there could be rise in tourism because people have a lot of holidays during that period. Also, I would like to give a disclaimer that I might hold positions in some of these stocks. So before going into these stocks, consult a financial advisor and then only enter into these positions. And also consider your risk appetite. Now let's go and let's discuss the first stock. So the first stock in my buy list is Indigo Airlines, the largest airlines in India. So Indigo is entering into a season where there is a festival season and it has a good demand for its product. Airlines perform well during this period because during holidays people prefer traveling to different destinations, and this is beneficial for a company like Indigo. Another factor which is quite important for Indigo is crude oil. Crude oil prices have a big effect on Indigo and its stock performance. So recently, after the Israel-Hamas war had started, we saw that last week the crude oil prices are shot up. But during the first 3 days of this week, there has been a dip from the $90 mark in crude oil prices. And if there is a lower move in crude oil prices, that could be beneficial for a stock like Indigo. The third is that Indigo is also going to benefit from the ICC World Cup traveling, which is happening right now, and the numbers could be seen in the upcoming quarterly results. And in the last 2 days, Nifty has fallen by close to 2%. But on the other hand, if we see the performance of Indigo during this time, it has remained flattish. So that means there are some buying interest in this stock, and there are buyers who are likely buying this stock for the next move in this stock. And in a recent article, it was also said that Indigo is expecting 30% year-on-year increase in the domestic departures during the winter schedule. So this is quite bullish for this stock for the coming months. And now discussing from a technical point of view, Indigo gave a breakout above a downtrend line on October 5th, and this was a bullish sign for this stock. And now we are coming down towards that trend line again, and we are testing that support again. So if we successfully hold above 2400 level in Indigo, that will be bullish, and that could take the stock higher towards 2500, 2550 in the coming month. So that's where I'm keeping my eye on. If Indigo is able to sustain at these levels and form a good base around these levels, then it is a good stock for swing trading for a few weeks to a month. And now discussing about the second stock. The second stock is from the FMCG sector, and the name of this stock is Tata Consumer. Tata Consumer could also be a beneficiary of the festive season demand because its product line is very diverse and it could benefit from the festive season buying. And secondly, the stock has been in an uptrend since September, and it has been respecting a trend line for quite some time. If we remain above this trend line, it is bullish for the stock. And now we are approaching that trend line support. So if this support is respected in the coming days, then we could expect another 3 to 4% move in the coming month in this stock. And clearly, Nifty is in a downtrend, and when Nifty performs badly, money flows into defensive sector like FMCG. So in that way as well, the risk is minimized in this play if you are a buyer of this stock. So finally, talking about the market, we are clearly in a downtrend and stocks have been falling for the past few days. Until the time this downtrend is happening, it is risky to be a buyer of any stock. As these 2 stocks that we have discussed were on the buying side, so some caution is needed because you're trading against the trend, and that is risky. So do trade as per your risk appetite. And finally, if you like this video, do hit the like button and subscribe to the channel. Thank you.